Welcome to the AI propaganda wars. You know, when there was an actual war happening, and there still is an actual war happening, I didn't feel very inclined to make many videos because there was a lot of noise, and I thought none of this is going to stop the march of AI. The march of AI is what's powering the market. Sure, energy prices will go high. It's still not going to stop people from becoming more efficient. Like if AI is really an efficiency tool and not a tool for driving earnings growth, which I think we haven't been given enough time to prove that is even the case. Because if AI is going to help with developments and people working faster, I mean that is going to compound to more growth, but it's not going to do it in the way of like, well, now we have major innovations every single day. It's like, well, no, your project is going to take a year, maybe it takes 6 months, maybe it takes 3 months. I know we've done about 6 months of work in in the last 3 months as we've become incrementally better at using these AI tools and doing all the training and stuff on the back end. There still needs to be the human component, but they could do quite a bit, and they learn how to get better once you do more with them, that gets added to the database. If you're keeping everything locally, which you should, have some sort of fact sheet for them. And then the agents approve. So, keeping that in mind, when I didn't see Meta say, oh, the agents aren't very effective, I'm thinking that's got to be a lie, because there's no shot over the last 4 months you don't think that the agents have improved. And we are working with AI. We have built our own models, but we are not the only. I almost feel like I should start taking all my personal meetings and just turning them into the podcast. But the thing is I feel like less people would talk to me because some of them don't want to be on a podcast or be recorded. But I've been talking for the past 6 months. I've been talking to so many startups, so many business owners, so many people who are using AI to become more efficient, to even people who are on the bleeding edge of the tech, who have spent the millions and millions and millions building their own server and on tokens to create businesses that are massive businesses that are ran by 5 people, that have gone from hundreds of people to 5 people who run 174 agents spending 16,000 tokens a day. But it isn't a big deal because you've replaced all these jobs and workforces. Those things are happening right now. They just aren't happening in public purview, right? And for a lot of the companies who say AI isn't being useful, it's like, I don't. It's like, think about this for a second. Some of you guys might not know who Gary Vee is, but I think Gary Vee is a great example of this, because Gary Vee was one of the first entrepreneurs to start making YouTube videos, right? And he's like, it's all about social media. You've got to make social media content. It doesn't matter what your business does. Your business, every business is a marketing company that happens to do some other product or service, but it starts with the marketing, because if no one knows that you do what you do, then there's no point in doing it. And he has done huge marketing campaigns, written all the best books, predicted all the social media trends, is always on the top of that. He's got, dozens and dozens of social media pages that are all doing well. And if you talk to him and you ask him, what are the big companies doing? Most of them aren't taking his advice. Even though organic content is the best way to do marketing and the best bang for your dollar, better than any ad campaign, most people still aren't doing it. They still aren't using it in the most effective way. And I think AI is just another version of that, where there are people who aren't going to believe or aren't doing it right or try it out, it doesn't work, and then they give up. And I do think that this is more existential than social media, though, because it's an efficiency tool. It's an efficiency and productivity tool. So you might do okay for a bit, but you're just going to find out that your competitors are able to do, work so much more efficiently than you. It's a sneaky thing, because it feels like nothing has happened and nothing's happening and nothing's happening. And then it's boom, whoa, how'd they get so far ahead? Well, it's because they've been fine tuning everything they do on a day-to-day basis, incrementally getting better and better and better. But those increments, it's not a linear change. It's an exponential curve of change, where every little thing gets fine tuned and slowly adjusted until boom, and it's the boom bamboo effect, where nothing grows for 6 months or whatever, and then boom, it's 3 foot tall, right? I don't think I got the time frame or the size, the height right, but you get the metaphor. So what does that mean for price action? Not anything, not at all. It's just me being in my own little, tribe. Because price is king and price tells all. And even if I don't agree with what the market's doing, I have to obey what the price is doing. So today was really interesting. Obviously, yesterday I came in bear at bullish. I bought dips. Made some money this morning. Caught the evening star. Came in short. Tried to buy the dip. You have clear exhaustion candles near the pre-market lows. I was looking at these areas of exhaustion right here specifically. Actually, let's go ahead and zoom in on this. So you clearly have, right? You have this pre-market low. We get looks to be like a wicked exhaustion through it. Then this actually fails through it. I actually held this position, added down here on this major exhaustion, where I then held through this because I was looking for a second candle confirmation to break through this low. I didn't want to get just wicked out of the position. And then we get the rally, and I'm like, okay, we're back. Well, this ended up killing me out. I didn't lose it. I still made profits overall on SPY, but this is also several hours. I mean, just hours of watching it. I think really my issue was just I had some mental exhaustion, and I should have been a little bit more patient. You know, I almost don't even want to do it, but I imagine if I draw a fib tool here, yeah, it's a pretty clean back test. So it is what it is. You know, this candle formation here is really scary though, to see this kind of look above and then fail into an evening star formation. And then it just gave a reversal anyways. And even when you get here, this is still tough to play. And by the time you break over this mini trend line here, this area of resistance that had formed, you know, you're looking at like maybe scalping something into the close or taking some swings. I ended up just leaving the bullish swings I had across other names. But if we zoom out from the intraday price action, then we'll really talk about the market as a whole. You know, on the daily, you have this wedge formation where you kind of touch the top of the wedge here and then got to puke through the bullish EMA, which isn't concerning on the face of it, but this was starting to break out and then got a brutal reversal. The other thing to note is that the 2-day was trying to turn until the market ended up filling the top of that wedge breakout. And your weekly is still in a bit of a tough spot where it's like, where you kind of do need to break to a new high. You need the RSI to discontinue this breakdown. But the monthly here looks okay. It looks okay. It's not amazing, but it doesn't send panic through me yet. So bullish trend was intact, not looking amazing. Now, if we look at names like MU, we've broke short-term trend lines. It's puking, and we have multiple. We also have this trend here that looked like it was going to defend. Then first this trend line breaks, then this one broke. And now you got two outcomes. Either you're going to come all the way down here and test, you know, maybe the low 900s, or you're completing an ABC right here. This ABC is really hard to see on the daily. I wonder if we come to the 4 hour, if we can get a better depiction of that. But what I'm looking at here, let's put this actually in regular hours. It's not much better than the daily. But for major topping patterns, you would look for something like this ABC retracement, which often equals 1. You know, all of these, you know, kind of rugs, they're brutal rugs, of course, but on parabolic runs, this is typically what you would see, you know, when you've made such like massive rallies. I mean, each of these moves is absolutely incredible. Like this one, you know, up 168%, you know, so it's hard to weather the 20% drawdown there or the another 20% here. Actually, is this one 20% too? I think this one's more. So this is 24% drawdown. It's spooky, but it's still bullish. Still kind of bullish. Then you have Oracle here. This is probably one of the nastiest pullbacks I think I've ever seen. But if you zoom out on this chart, this looks absolutely ridiculous to me. I mean, this company is basically back to its evaluation before the AI craze, which means the market's saying is that all the new customers they've gotten from AI and the TikTok deal, mind you, which was not insignificant whatsoever, have done nothing beneficial for this company, and in fact are hindrances to them. Those are bad things that this company is doing. I don't believe that at all. And on additional to that, is if we go to the daily here, like we are dramatically oversold on this name. I mean, this name is desperate for a bounce. The 4 hour here, if we go to extended hours, still not a good depiction. If we go to the 65 minute, you can see where we had some big buying step in this morning, then got a denial. These two big candles to the downside make me think that maybe you get one more candle that actually whips you down to 135, but I think it would play out in a quick move. I mean, just even looking at the futures here, I mean, straight up recovery, almost a full recovery of the sell off, right? I mean, you're testing the pre-market lows, it's pretty much the orb low of the previous day, but SPY's even cleared that pre-market low. What? No, it's not SPY, it's ES, but futures full recovery, not really afraid of the headlines in the news. Bitcoin also showing signs of strength. It's trying to set up this failed breakdown. Notably, the daily is starting to turn too. So this is really interesting. If the weekly becomes a fake out and the daily and weekly turn in tandem, because let me go back actually. The daily had turned bearish at the same time that the weekly had. And if this 2-day had given a stronger confirmation, that would have been a plus short setup, because you're breaking a major trend line and your momentum, your long-term momentum time frames are all turning to the downside at the same exact time. Okay, that's a huge short signal, but there's been no follow through whatsoever. And I mean, we've gone almost 2 weeks with no follow through. That's I mean, if you actually go back to the June, we've gone over a month with no follow through. Which, to be honest, I don't. So look, I mean, it's already on the internet, so I should just share it. But this TTM strategy only works on companies that are over $2 billion market cap over a certain average volume, right? So like when I scan for these types of plays, I had to run that parameter, or I'm going to find low liquidity nonsense that don't really obey momentum confluence in any significant way that generates a good return, right? So Bitcoin definitely meets most of those parameters. So to see a name that meets those parameters but disobeys a very high probability setup. Now keep in mind, when those setups fail, they usually initially give a great move and then fail. This didn't even initially give a great move. It just like trended sideways. I'd say that's probably the lowest probability outcome. And I mean, I honestly cannot even remember when I've seen that before that way. So I'm already feeling very bullish and taking bids there. And I'm seeing kind of where tech is. And Oracle is probably the best example of this. Is like, if this trade fails, maybe I lose 10, 15%. Maybe it ends up being a little bit worse. Maybe there's, I mean, I would imagine for a trade like this, premiums from here probably hold up fairly well because they're already stupid cheap. And I mean, just even look at where your weekly EMA is. Like, even when this stock gets super bearish, there's usually a rebound at least to try and find its way back to a mean, right? So I'm looking for that for Oracle. Now, the nuance here that I was really plaguing myself with this afternoon is, even if we do see a significant bounce, and even though I do think that regardless of what happens, we end up with that market much higher by the end of the year, I do want to be really mindful of oh, it's on the weekly. That's why it looks like that. I do want to be mindful of a failed breakout here. If we now fail through that 740, I'm probably going to start ripping off longs. Not just like slow closing. I'm probably going to rip them off. I'm going to start closing a ton of positions. And that might end up, being a fake out and the market rallies higher and I miss out on some gains. But I just have a feeling that with this type of setup, and with the narrative environment, things don't necessarily have to be true to still get a reaction out of the market. So, I do think higher still, because I don't think that the headlines from Meta are a good assessment of where the space is or of the amount of money on the sidelines that can participate in this rally higher. The amount of money not being deployed even in the AI names, or even just think like there is still a world, by the way, where the AI narrative fails, but AI efficiency pushes forward, right? And there is something I should have mentioned, and I just throw it out there just so everyone knows. But like China, all of China's hardware companies actually put out bearish reports, put out financial risk advertisements, all at the same time. And so that's also another piece of the propaganda machine. Circling back, there is a world where these AI efficiencies lead to companies in the peripherals or companies that don't have direct interactions with AI, um, lowering their costs and therefore boosting their EBITDAs, and then being rewarded with higher valuations, kind of regardless of what happens with like jobs reports or inflation or anything like that. Like you don't even need to sell more of anything if you are just running lighter and more efficiently, right? Like that produces returns all on its own and will reward you in share price, which will make you a bunch of money, right? And that's what generates the K-shaped economy. And that can occur even after a massive market sell-off because whatever, maybe cloud does fail and everyone runs everything locally on some new hardware that NVIDIA and GPT and AMD make, and it becomes suddenly, for the first time ever, people actually adopt a new technology both rapidly and efficient with hyper efficiency off the rip, which almost never happens. But maybe there's a world where it happens. The thing is AI won't tell you what you should do or the best thing to do if you don't ask it the right questions to get that outcome. And a lot of people who are struggling with AI don't have the skill set to unlock that, where they'll start with an assumption of this is the way you do this rather than asking a intelligent AI model, how would you do this? Little things like that make huge differences in the outcomes that you can generate. But yeah, that's kind of where my thoughts are. I'm sorry I'm getting rambly here, but there is a world, most definitely, where I make a very hardcore pivot, even as soon as next week, and I hop out of these long positions. But with some of those dramatic pullbacks within the AI space, the dips are just too juicy.